Namaste and welcome back to the channel of Investing Advisors. After yesterday's bumpy ride in the Indian markets, we are back to break down what today's market action means for tomorrow, Thursday 22nd May 2025. In fact, today we saw a significant recovery coming in. And let's deep dive into the key factors today. Also, we will discuss sector-wise performance and what the global cues suggest for tomorrow's trading session on the Dalal Street. So let's get started. After the pullback we witnessed yesterday, the Indian markets showed remarkable resilience today, recouping roughly 50% of those losses. Both the benchmark indices bounced back and closed firmly in the green. The Nifty 50 managed to jump 129 points, registering a gain of 0.52% to close at 24,813 levels. Similarly, Sensex rallied by a strong 410 points, climbing 0.51% to end the day at 81,596 levels. This strong recovery indicates a potential return of buying interest and also suggests that the investors might have seen yesterday's dip as an opportunity, and that is when there have been a continued buying from the time we have opened at the lows in the market. Now let's take a close look at how the different sectors performed today. Interestingly, we saw broad-based buying across the board, with all major sectoral indices closing in positive territory. This widespread participation is a healthy sign for the overall market sentiment. Realty sector was the star performer today, surging by an impressive 1.72%. There was a bounce back after some profit taking in previous sessions. Raymond, DLF, Phoenix and Lodha all jumped 2% in the trade today. The pharma sector also showed significant strength, climbing 1.25%. This could be due to a lot of people impacting due to COVID cases again. That is when we had seen the pharma stocks had jumped today in the trading session. Gland Pharma, Natco, Biocan, and Alchem Pharma were all up by 2%. So these stocks will likely remain in focus in the tomorrow's trading session as well. Auto sector also continued its positive trend, gaining 0.72%. Motherson Sumi, MRF, and Bajaj Auto all traded in 1.5% range in today's trade. So there could be also multiple reasons like strong sales numbers, newer vehicle launches. All this led to positivity in the trade for auto stocks. The IT sector, which has seen some volatility recently, also participated in today's trading session, and there was a good bit of recovery that we had seen. That is when the IT sector rose around 0.69%. So global tech trends and the currency movement, along with the spending patterns that we anticipate for this particular year, will continue to influence this sector. So let's track it even tomorrow. The FMCG sector posted a modest gain of 0.37%. This sector is generally considered stable and less volatile, providing some support to the overall market. So the stocks that were in positive today were Godrej, Nestle and Dabur. All this had traded more than 1% gains in today's trading session. So tomorrow ITC stock will be in focus due to Q4 results announcement. Though as far as the news analysis is concerned, it is expected to be tepid. Now let's take a look at how the global markets are shaping up, as they often provide crucial cues for our domestic market the next day. The overall picture is a bit mixed, suggesting a cautious undertone in international trading. In the Asian markets, we saw a mixed performance. Hang Seng in Hong Kong showed decent gains, up by 0.62%, and the Shanghai Composite in China also edged higher by 0.21%. However, the Nikkei in Japan saw a decline of 0.61%. So this divergence suggests varying regional factors are at play. European markets also presented a mixed scenario. The DAX in Germany was up by moderate 0.34%, while the CAC in France saw a dip of 0.40%. The FTSE in the UK remained largely unchanged. So there seems to be lack of clear direction in European markets as well, and this might lead to some cautiousness in the tomorrow's trading session. US markets, on the other hand, have been seeing a strong selling pressure today. The tech-heavy Nasdaq lost 1.2%. S&P 500 is also in red, down by 1.41%, as well as Dow Jones also saw a significant sell-off, and it plunged already 1.8% as we speak. So this sharp downfall overnight in the US markets could lead to some volatility in our market opening for tomorrow. Now let's see from the perspective of charts as well as open interest what the markets suggest. So we are in the Nifty chart, daily chart. Okay, so as you could see, yesterday we had discussed that after a severe sell-off, we anticipated that the Nifty index would trade in a consolidation or a range-bound kind of scenario. And in fact, though the market opened at the same close level, and then from there we saw some sell-off coming in, and then post that we saw a recovery coming in the maybe first half of the not first half in the first hour of trade itself, and then from there on slightly we showed improved performance, and that continued to trade really well. So Nifty approached 24,950 odd levels, but then from there at the higher levels we saw selling pressure coming in, and 150 points were shaved off there. So Nifty closed roughly around 24,813 odd levels. So overall, the range that the Nifty covered was around 250 odd points. But then the close still did not remain that strong. And since we already see the US markets are down by 1 to 1.5%, we will see a good pressure again on the Indian markets tomorrow, and that could be one of the factors which could show some sell-off in tomorrow's trading session, and we might start trading below 24,700 odd levels in the opening, and if the markets are unable to recover from the lows of today, that is 24,700 odd, then we might see selling pressure to continue, and we might approach 24,600 and even 500 levels, as there is Nifty expiry to tomorrow. So a lot of volatility is expected to be seen. So it is expected that we should trade cautiously. So the first trigger is 24,700 odd levels. Immediately once we see Nifty trading below that range, uh, we should cut down our positions on the longs and take sideways trades in the range of 24,500 to 24,700 odd levels. On the higher side, the resistance still remains at uh, roughly around 25,000 odd levels, from where we started seeing that selling pressure, and in fact even today it tries to reach 25,000 levels, but before that itself we saw significant selling pressure that came in. and that is when market was unable to close to those levels. So for us, the trading range tomorrow is going to be from 24,700 to 25,000 odd levels. So if in the morning trade the significant buying interest is not seen, then we will slide down towards 24,700, 600 and 500 levels. Now let's see from the perspective of open interest. So open interest showed some, shows some different picture. So despite, we tried approaching 25,000 odd levels, but we could not reach there. But still, if you see, roughly around 30% of open interest positions on the call side had been, unwound. So this suggests that there is, selling pressure that had come in. And if you see at 24,900, 24,950 and even 25,100, 200, all these levels we saw unwinding of positions on the call side. So as far as open interest positions are concerned, some pressure is being seen from the buyer's end. So at lower level, definitely at 24,800, we see significant support coming in from the put writers. So tomorrow as well, despite the gap down opening, we might see a strength being built, and there would be a push from the lower levels to move towards 24,800 and beyond. So if that happens, then we would see a significant writing that could happen at 24,800 odd levels from the call side, sorry, on the put side. And then we might also see a significant call writing happening at 25,000 odd levels. So overall, tomorrow's trading session is going to be volatile, and we should be very careful immediately once Nifty closes below 24,700. That is the caution, and no long should be continued from there on. So there could be a swift downfall of 200 points, and we approaching towards 24,500 would not be difficult. So on the PCR front, overall it is zero point 0.6, which is not significantly positive. At the money is also trading at 0.64, which is not at all positive. Now from the perspective of Sensex, so even on Sensex, we at the higher levels, we tried moving beyond 82,000 levels. It in fact touched those levels, but then there was a significant sell-off that came in at 82,000 odd levels, and that dragged the markets to shave off roughly around 400 odd points from the highs. So this selling pressure seems to be severe, and that would definitely dent in terms of our um opening levels, as well as how at the first 30 to 45 minutes how the markets are stabilizing itself will matter a lot. If we are unable to sustain to the lows of today's, that is 81,200 odd levels, then we are bound to move or trade below 81,000 and see 80,500 as the first support to come in tomorrow's trade. So the range is going to be high or large for Sensex. So from the range of 80,500 to 82,000 is what we might anticipate in tomorrow's trading session on Sensex. So for us, the first resistance definitely remains as 82,700 odd levels, from where we saw those reversals coming in. So in fact, this entire three trading sessions now looks to be negative, and this would add a lot of pressure in tomorrow's trading session. So the immediate stop should be at 81,000 levels. So once we start trading below 81,000 levels, significant sell positions should be taken up to gain that opportunity. Now let's see from the perspective of open interest. Open interest says a different picture on Sensex. So at 81,500 we see significant calls as well as put writing that had happened. So tomorrow's trading session is going to be a tug of war at 81,500 odd levels. If the open is low and we are unable to sustain, then we might break 81,000 levels too. However, if Sensex is able to sustain 81,500 odd levels, then we can easily approach towards 82,000 levels. May not be for tomorrow's trading session, but at least in a day or 2 days time. So for tomorrow, some selling pressure is going to significantly be there from the call writers. Given the global markets also underperforming, we might also maybe open negative or mildly low, and then from there, if the buying interest does not continue, then we are expected to see a sell-off again maybe tomorrow. PCR stands at zero point 0.6, which is not significant. However, at the money PCR is 0.78, which still shows some strength and bullishness. On Bank Nifty, we kind of see a indecisive candle. Now, since this is going to be a crucial zone for us, roughly around 55,000 6 to 700 odd levels from where we saw the selling pressure that came in uh, yesterday. So in today's trading session, we tried climbing at those higher levels, but then at every high when we approached, there was a selling pressure that significantly got built up. So this selling pressure has led to an indecisive candle in today's trading session. So tomorrow, if the market opens lower, uh, below 54,700 odd levels, which was the low of today, then we are anticipating a sell-off to continue in tomorrow's trading session, and we can easily approach 54,000 odd levels in maybe a day or two. So 54,000 to 55,700 is what the range that we will trade for maybe another 2 to 3 trading sessions. Now let's see from the perspective of open interest. So we have been holding 55,000 strike from the put writers from a very long time. So they have been firmly holding those levels. So tomorrow while open, we might see a negative opening below 55,000 odd levels on Bank Nifty. If that happens and the market continues to stay at that level and stabilize, then maybe towards the end of the day we might see some recovery. If we are unable to stabilize, then we are headed towards down primarily at 54,500 odd levels as the first trigger, and then move towards 54,000 odd levels as the second trigger. Now, in the previous, sessions on the open interest, we did not see a lot of build-ups happening at the lower levels on Bank Nifty. However, now if you see, you will not see significant open interest positions beyond 56,000 on 56,000 strike from the put writers. However, here if you see on the call writers, until 53,000 level, which is almost like 2,000 points down, the call writers have been significantly writing the positions. So this suggests there is some negativity or some pressure that is getting built up on the Bank Nifty or the banking stocks. Now let's see from the perspective of PCR. PCR overall is zero point 0.8, which is quite positive, and at the money is also 0.79, which is still strong. So Bank Nifty at 55,000 levels still holds that positivity because the put writers are not willing to give up. So if that continues, then we are on a safe side. Else, if be prepared to approach 54,000 levels for the immediate day or 2 days trading session. Now, lastly, we would discuss on the FINNIFTY chart. So even FINNIFTY, if you see, has created an indecisive candle. So from here, this shows or talks more of the um, reversal. So reversal meaning to say we are expected to head towards the lower levels at 26,000 being the first support level, and if we are unable to hold that, then we might fall further below and approach for 26,700 odd levels. So on the higher side, 26,600 remains the resistance. So as long as we hover or trade in this range, there is no much worry. Once we cross below this level, then we could see significant sell-off coming in, and then we might open up for the previous lows from where we had recouped back. So let's see how the open interest you know uh, bar shows us. So from the perspective of open interest, if you see at 27,000 levels, the call writers have been significantly holding these positions. However, on 26,500, there is of course a selling pressure from the call writers, and this selling pressure is got added until 26,000 odd levels. So 26,000 levels remains quite crucial for us, though there have been some open interest positions that got built up yesterday on the put side may not give a significant support if we start sliding below 26,200 odd levels in tomorrow's trading session, because that would build a lot of pressure on the 26,000 strike, and the put writers might get weakened, and some selling pressure would continue thereafter. So overall, PCR is trading zero point 0.7, which is still positive, and at the money it is trading at 0.76, which is again bullish to positive. The last segment that we are going to discuss is the FII and DII data. So on the index futures, the FIIs are still holding the or carrying the shorts to the tune of 37,500 odd contracts. On stock futures, they have been quite bullish and still continue to hold 17.98 lakh contracts, which is positive. On the call side, FIIs bought to the tune of 2.8 lakh contracts. However, at the same time, they have also bought put options for 2.83 lakh contracts. So this suggests that there is no significant buying interest from the FIIs in the index options. So merely 3,000 odd open interest positions is being continued from their end. So nothing significant at all. Now from the perspective of proprietary traders, on index futures, they are short by 6,000 odd contracts. On stock futures, they are mildly holding 2.81 lakh contracts. On call options, they have been long to the tune of 1.35 lakh contracts. And on put options, they are again long by 9,000 odd contracts, which is not significant, but still overall proprietary traders are holding 1.26 lakh contracts on longs. So tomorrow, if the market opens positively, or even though if it opens negatively, but buying interest gets built in, then it is the proprietary traders who are going to bag a lot of money in tomorrow's Nifty's expiry. Now from the perspective of retailers, retailers have taken long positions on futures to the tune of 43,570 odd contracts. On stock futures also they are holding 17.41 lakh contracts on long side, which is positive. On call options, they have written 4.15 lakh contracts, which is quite huge and significant. On the put options, again they have shorted 3.4 lakh contracts, which suggests that the net DIIs are holding 75,000 in shorts, contracts in shorts on the index options. So it is the FIIs, and FIIs no significant positions at all, but still they are short on index options, and it is the retailers who are short. So if tomorrow's trading session opens low and that sustains throughout the day, then it is the client retailers or the FIIs who are going to make big money. In case if market moves on the higher levels, then it is the proprietary traders who are going to make big gains again tomorrow. Now, from the perspective of cash markets, so DIIs have bought to the tune of 684 crore, which is positive, and FIIs on the other hand have significantly bought 2,202 crores in the cash market. So it suggests that on cash markets or overall in stocks, they are long. However, on the derivatives, FIIs are short. So tomorrow's trading session is going to be quite volatile due to Nifty expiry, and also overnight in the US market, since it has been trading negative, that would add to a lot of pressure on our markets too. So to conclude, while today's recovery is a positive sign, but the mixed global cues suggest that we should approach tomorrow's trading session with cautious optimism. So focus should be sector specific movements, and whatever key support and resistance levels that we had discussed on each of the indices should be closely monitored. So if we see the support levels are getting broken, there is a sell-off that we could see in tomorrow's trading session. In case if those supports are held, then we might see all the indices approaching towards its resistance, or wherever we traded on the high side today. So at those levels we might approach. So ensure that on to tomorrow's expiry, trade with a proper risk management strategy. So that's it from our side. So thank you for tuning in. If you found this market outlook helpful, please like this video and share it with your trading buddies, and subscribe to our channel for more insightful market analysis. Don't forget to hit the bell icon to stay updated. So we will be back tomorrow again with the recap of the trading day, and looking forward for the next trading session. So until then, trade safe and have a profitable trading session.